and other sectors with Deepak Ramaraju, Senior Fund Manager at Shriram AMC. He's with us on the show. Deepak, is Kotak Mahindra Bank a preferred stock for you? Do you own it in your portfolio? Are you recommending it to clients? And if not, post these numbers, does it make it?
Definitely no. Thanks for having me on the show, first of all. We don't own Kotak Mahindra Bank in any of our portfolio, but I can't make any recommendations because I'm a fund manager, so I won't be able to recommend any stocks to any individual stocks to investors.
But what's the broader view on private sector financials?
Typically, the credit growth has to pick up because the liquidity is easing now. So because of, though the liquidity is still tighter, but the RBI is taking measures to improve the liquidity. So it should pick up going ahead. And we'll have to wait and watch for the budget. So how the budget numbers will be given out. So based on that, a further call on the credit growth will be taken up. But sequentially, we are seeing the net interest income relatively stabilizing because the deposit growth is also mobilizing right now. So that's the one positive side for the private lenders to a large extent. So, and also the NPAs are also kind of quite stable. So we're not seeing any additional delinquencies coming on the private players. So that's where we are relatively positive on that.
Deepak, between PSU banks, between private banks and NBFCs and also CV financiers, where would your order of preference lie?
I would still bet my money on a little bit on the private players relatively, and NBFCs are relatively better off compared to the private banks as a whole. And PSU is going to be kind of a beaten down valuation, and it definitely from a valuation perspective gets better performance from a valuation pick. So we need to be stock specific on the PSU side. Yes, we need to see how the credit growth pans out on the PSU names as well.
What was the call, Deepak, going into the earnings for large cap IT? And what have you made of the earnings that we've got?
IT in general is yet to pick up. It's one more quarter of pain from our point of view because the discretionary spending in US has to pick up, or for that matter in Europe has to pick up. The BFSI just started showing up some kind of positive trajectory there. So that's the reason we are seeing we can expect the IT to outperform going ahead, but this current earnings is a little bit painful. It's going to be a mixed bag to a large extent, and many of the stocks are relatively delivering below expected numbers. But it should improve going ahead because the discretionary spend is going to pick up, and as well as we can expect some kind of traction coming in on the deal win side. So that's going to look positively from the IT from a perspective from the medium term to longer term.
Deepak, one sector that you have an overweight on is actually the pharma pack. In other sectors, you generally have a stock-specific view, or you're rather large underweight on metals as well as chemicals. Pharma, you like going into 2025, what will be your pecking order as far as pharma is concerned? Which other players you like? Will it be the API names or the CDMO names?
So pharma as a whole, we have been kind of outperforming in the last 1 year right now. So we expect that performance to continue. A generic space are generally better off, especially the US-based generic numbers are doing better. And we continue to hold certain names there who are favoring the generic side, especially the names like your Sun Pharmas or Lopes of the world. So they're the ones which are part of my portfolio, and they continue to deliver certain numbers there, and we are confident on those kind of earning trajectory from these numbers. Having said that, the specialty kind of pharmaceutical, or for that matter, the CRAM space is still yet to see kind of significant uptick coming in. So we'll have to be very cautious on the CRAM side as well on the US specific CRAMs players as of now. So.
Understood that. So pharma, we have your call. You continue to remain underweight as far as metals and mining are concerned. Why do you have that view, and what will turn around your call on metals? What do you expect will happen? A weaker dollar, will that help? So going forward, metals, will you make a change over there?
So metals, as of now, it's dependent on China as a growth factor to a certain extent. One. Second thing is the dollar is also strong. So both the factors has to change quite significantly for the metal sector to read it. So we are also seeing a bit of dumping happening from the Chinese to a large extent. That's the reason we are also seeing the oversupply coming from the China also. That's the reason you are seeing a bit of metal prices relatively remaining muted to a large extent. One, the dollar has to retract. So once the dollar becomes weaker, that's when the commodity prices generally shoot up in the past that we have seen as a correlation. So that generally binds with even the metal prices also. So you can expect the metal prices to go up. That is one. And also the demand has to significantly improve. Even on the domestic side, also the government spending is a bit delayed. That's the reason you're also seeing a kind of muted demand coming on the domestic side also, especially from the infrastructure. So those things has to change a bit. The government spending has to improve, and also China as a growth factor, if it starts showing up some kind of growth numbers, the metal sector as a whole will start kind of re-rating positively. So till such time, we are not kind of confident on the metal space to kind of show a broader based outperformance or a bigger rally coming in, and then that space as of now.
Thank you very much, Deepak, for joining in. Look forward to more conversations. Get into a break. On the other side, we'll come back with more on the markets and today's new listing, Lakshmi Dental. Stay tuned.